Man, you all, man. The supply situation is not looking any better. So let's go ahead and get into this intro. We're going to get into what we came to talk about today.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, we are back. We are back in the building today. I see some people have joined. Be sure to drop a comment in the comment section below so that I can acknowledge you. Put your comment up on the screen if it's appropriate, and we can engage back and forth. So today I want to talk about the supply cuts to oil. I've been having multiple videos about oil. I recently did a live last night, and I had Josh Young, who is a very pronoun famous um, oil expert, and so he came on and he spoke, gave us a lot of knowledge, and as well as Rick Rule. And so the price of oil and gas is continuing to skyrocket. We're going to get into a couple articles today, and then tomorrow we have CPI inflation coming out, which I think that CPI inflation may go higher because of the price of oil and such. And so if the CPI inflation goes higher, the question is interest rates going higher? Is the Fed going to raise rates again to combat inflation? So we're going to jump into a couple articles here. So let's do it. All right. So the first thing that I want to share with you all is the supply cuts from the OPEC. This was within the last week. These articles were coming out. Bloomberg just published one recently about supply cuts, and so this one talks about Saudi Arabia and Russia extending voluntary oil cuts to year end as markets jump. And so Saudi Arabia and Russia on Tuesday said they would extend voluntary oil cuts to the end of the year, despite a rally in the oil market and analysts' expectations of tight supply in the fourth quarter. Oil prices rose sharply following the news, with Brent rising above $90 a barrel for the first time since November. Despite steady increases in Iranian and Venezuelan oil exports, as the market believes the United States is not enforcing sanctions as stringently as in previous years. And so we see that there's been cuts to the oil supply from OPEC nations such as Russia and Saudi Arabia. This was an article from Bloomberg. They just put out about 12 hours ago. It talks about the OPEC oil data show 3 million barrel shortfall in Saudi supply squeeze. And so we see that these nations are coming out and they're restricting the amount of supply of oil that is coming onto the market. What this does is this increases the price of oil, and increases the price of gasoline and other things, that increases the price of oil stocks, right? And it pretty much just shows, like, when you don't produce, if you're not producing the commodity that you're using, then you're pretty much giving your power over to other nations. And so we can see that this is happening here. So oil jumped up really high again today. This is from Yahoo Finance. Oil prices hit 2023 highs as market faces supply squeeze. Oil prices hit new 2023 highs on Tuesday amid a supply crunch resulting from output reductions by Saudi Arabia and Russia. It says West Texas Intermediate hovered just below $89 a barrel, while Brent crude sat above $91 a barrel. The prices represents oil's loftiest level since November of 2022. So we saw the price of oil come down significantly, and then now it is back up. And that just shows, like, even if the Fed is tight on their policy, if they're keeping interest rates high and such, whenever you need these commodities and the world population is growing and demand is still strong, they cannot stop what is happening, right? And so the price just keeps bouncing back up, so this is something that we have to pay attention to, right? um it says the rally comes as OPEC data shows the industry faces a supply shortfall of 3 million barrels per day next quarter. Saudi Arabia and Russia recently announced an extension of unilateral, unilateral, my bad, y'all. I'm just fumbling on my words. Maybe I'm going too fast. Output cuts through year end, raising worries of tight global inventories. That's on top of OPEC plus reductions announced last year. So the supply, it just continues to get very tight. I shared a chart with Josh Young. Um, Josh Young shared that pretty much oil supply hasn't been this low since 1985, and we have, even in the United States, we have more people. I mean, we have, how many more people? 100 million more people since 1985. So that just goes to show, like, we need to produce more. We need to produce more to keep the commodity prices low. This is pretty interesting. So then Yahoo Finance just recently came out with this article here. Inflation expected to tick higher in August as oil prices surge. On Wednesday, investors will watch closely for one of the most important data points the Federal Reserve will consider in its next interest rate decision, which is the CPI for August. The report for release at 8:30 a.m. comes out pretty early in the morning, 5:30 a.m. my time. Is expected to show inflation of uh, 3.6%, an acceleration from July's 3.2 annual gain in prices, according to estimates from Bloomberg. So they're saying that, okay, the Fed has tightened, the supply, or tightened the demand, right? They've raised interest rates. They've sucked a lot of liquidity out of the system through interest rates. I mean, people having to pay higher interest on their debt and things of that nature, right? But the government is, obviously, you have the fiscal side of it. The government is still spending records amounts of money. They're about 2 trillion over budget. And so that's stimulating the economy, while the Fed has been tightening on the economy and still reducing their balance sheet. So liquidity has been pretty flat. Otherwise, if one way, if the Fed, say the government wasn't running such huge amounts of deficits and the Fed was to continue to tight, we would have seen a big, huge market downturn by now. So it says a significant rise in energy prices is expected to drive the bulk of those increases. Oil prices hit new year-to-date highs on Tuesday, with West Texas and then Brent crude over 92 a barrel. So it's talking about inflation is going to tick back up. So the question is, can the Fed actually fight inflation? The Fed cannot print oil. And I took that from Lynn Alden, right? The Fed cannot print resources, right? They can only affect the demand side. So they can raise interest rates, which costs us more money to borrow, and then we have less money to spend, right? But supply is still tight. In order to address supply, you have to bring more supply online. And unfortunately, we don't really see that right now. I mean, legislation isn't really helping with that. There's still all these hurdles for companies to go through and such. People don't want to invest in the sector. It's really one of the most hated resource sectors right now. So people think that it's over, but it's really not. It's really not. And so we're just going to turn our attention to this tweet from Jim Bianco. It was a pretty good tweet. He says that this is not done going up. And he's looking at WTI crude futures. And he says OPEC data shows 3 million barrel shortfall as Saudis extend cuts. He says not only can't they stop it this time, now they are buying too, bottom panel, making it worse. So what he's saying is that this is the SPR, the Strategic Petroleum Reserve, which Biden started releasing from to reduce the price of gasoline. And now, this is normally used for like wartime and things like that. It's a storage for, like, okay, if you have to go to war, you got your SPR that's there, right? And so We've reduced that significantly. I mean, every presidency is released from it, but as you can see, since Biden's been in, I mean, we've cut that in half, almost in half, right? And now we're buying, right? We're buying to try to refill it. So we're buying something that we should be reducing. I mean, something that we're buying something that we should be producing. So it's kind of interesting. I just don't get the logic around this, right? And so this, creates more supply issues, right? Then it says Jim Bianco says large speculators, lower panel, are not positioned for it near the lower end of the last decade. And so he's saying that the large speculators are not positioned for this move up. He's saying that pretty much, like, a lot of people still think that the asset is done with, it's over or whatnot, and many of the big investors have not brought capital in. I mean, right now, energy makes up about 4% of the S&P, which historically in commodity bull runs, it makes up anywhere from close to 20% of the S&P 500. So, yeah, people aren't ready for this. And then he goes on to say that, and this is just a start to going higher. So that means that there's still opportunity for people to get in on this ride up. As we see supply cuts, supply and demand, simple economics are coming into play. And yeah, I mean, if we're not going to create more supply, then we're going to have to deal with higher prices, higher prices. Um, Yep. Neophyte said, the market look like it's bouncing back up. How's your portfolio doing, D? My portfolio's been up for the most part. I mean, it's been consistently up. So I'm in uranium's been bouncing up. Oil's been bouncing up. Like, all of these natural resource stocks have been trending up. And so I mean, the price of uranium is just staying pretty steady too. So that's been a pretty good thing. And right now, I'm in it for the long run. So it's cool to see this short term momentum, but I think that there's going to be some major moves later on down the line that we should be positioned for, because we haven't we I don't think we've seen anything yet. I don't think we've seen anything yet. I mean, it's starting to play out, before our eyes. So, like, I'm not selling for a while. But my portfolio is up on the year. So yeah, because oil was getting killed, I was buying these natural resource stocks and buying what's cheap, while a lot of other people were chasing Nvidia, right? And so, not saying that they didn't make money, but at the same time, like, I'm gonna buy what's cheap and hated before everyone starts to try to pile in. Um, Sharper said, any other sectors that interest you besides natural resources or all in commodities? It's a great question. So other sectors that interest me are, let's see. I like what's cheap. You know what I'm saying? So it's not really about just resources or commodities. It's about what's cheap and what's hated. I mean, these are just the basic things. I mean, like Warren Buffett talks about, you know, being greedy when everyone else is fearful, being fearful when everyone else is greedy. So, like, Warren Buffett's buying oil right now, and so it's all about the cycles. So I like some tech companies. I have some tech companies that I really like. They're pretty cheap right now. PayPal was one of them. Quite a few, but I just know that just from studying the macro and the cycles, that you have these growth to value ratios, and we're in a period where we have to invest more in natural resources, and so that's where I'm positioned. um and right now, interest rates aren't low as they were, right? I mean, we were in a low interest rate environment for a long time. I mean, every tech stock was booming and everything, everyone was following after that craze. But For me, it's just like, okay, I need to buy what's cheap so that I can get the most return on my investment. But natural resources is definitely one of those, right? Um, I wouldn't be bullish natural resources if we already had our bust. I mean, like after 2008 when oil, cratered, right? I mean, it bounced back some, but I would have been selling. I would have been selling. And I would have been buying what's cheap during that time, which what was cheap during that time in 2008. I mean, you could have bought Microsoft, you could have bought, Apple, Tesla. I don't know if Tesla IPO then or whatnot, but you could have bought Amazon, right? You could have bought all these stocks and rolled them up, while the Fed was printing money to keep us from going back into the global financial crisis. So I just think that the real stuff right now, because of how much money has been injected into the system, into the economy, how addicted we are to this cheap money, right? Um, I mean, government budget is like over 2 trillion over their budget, right? So like I just think that now it's time for like the hated assets, like the revenge of the nerds, right? The hated assets, it's their time to shine. And so that's where I'm positioned. And eventually I will be looking at the tech sectors and such, but that it won't be for a little while, because I think that these stocks are going to run for a while. I mean, we saw that from the dot-com bubble to 2008, 2011, like, I mean, dot com, all them tech stocks went cratered. And then people were buying gold, people were buying oil, people were buying uranium, and then you reached that peak in 2008. And then when, we had the crash in 2008, it fell and then it bounced back. So I'm just into what's cheap right now. What do you think about LAC finding a supposedly largest lithium mine in Nevada near Oregon border? Hey, that's dope. I mean, I would like to check that out. I mean, LAC is has been getting beat up for a while. I mean, I wouldn't mind looking to it again. Actually, the guy that I interviewed from Largo Physical Vanadium, Jonathan Lee, he's a cool guy, cool friend. Um, he was investing in LAC like way before it boomed. And his I think it's his business partner made millions off of LAC because they were just positioned in LAC around, I think it was like 2016, 2017, or maybe a little earlier than that. So it's about, not necessarily being early, but it's about like being in the cheap assets before they really start to boom. So um I have not shared my portfolio lately, which I do have some companies. Eventually I'll share or whatnot. I have not shared it lately. It's been a while since I shared my portfolio. I actually took a lot out. I went risk off for a long time. I was risk off, and now I'm just kind of inching a little bit of money in at a time. Because yeah, I had went risk off right before October last year when everything tanked. And I was just like playing it safe. I was playing my cards safe. I wasn't being too risky. I didn't want to get wiped out. I mean, that's one of the biggest goals, is not getting wiped out. And so now, ever since the beginning of this year, I just been throwing little money in at a time, just dollar cost averaging into positions, while still maintaining a bigger cash balance, that I can earn 5% interest on, or buy short term treasury bills and get 5%, 5.6% interest on. So yeah. So yeah, that's why I haven't shared it. It's a work in progress. So yeah, so I appreciate you all for joining, but let's see what CPI. What do y'all think CPI is going to be at tomorrow? You think it's going to be higher or lower? I think that it's likely going to be higher, and the Fed may come out and tighten again. I mean, they're making it clear, like, hey, 2% is our target, and they actually look at the core CPI, and yeah, they look at the PCE, I believe. And so um the Fed, I mean, they're nowhere near their target. I think the PCE is at no, I forgot which one. I think they look at the PCE. I keep forgetting. But yeah, so the Fed there it's at 4%. The Fed's target is 2%. So, are they going to raise interest rates again? Are they going to break the markets? That's the question. Are they going to break the markets? I think that they're going to break it. That's what I think. That's my take. So I'm holding cash, just like my guy. My bad, assuming you're a guy. I'm just saying my guy, Sharper. I hear you holding cash is underrated. Yep. Wait for them items on your shopping list to come down. Yeah, you got to buy when it's cheap. Buy when there is blood in the streets. You don't go chasing after these fads and FOMO, fear of missing out, and then getting wiped out. A lot of people got wiped out over the past, however many couple of years, and so you're not hearing as many people talking as they were. Everyone was an expert a couple years ago. Interesting enough, I hear today about student loans kicking back in and pulling housing market down. Thoughts? Um, I don't know if you're saying that student loans will pull the housing market down, but I mean, I think that the people that qualify for the forgiveness, their payments are very cheap if they went and applied through the thing. I think I shared this before. I My student loan payments are $20 a month. $20 a month. So even if they did they didn't do the forgiveness, they still came back around the backdoor loophole, right? And so some people aren't going to have to pay that much. But obviously, if you have private loans and such, like, yeah, you're going to be experiencing some pain. Sally Mae want their money. SoFi want their money, right? Um, so it just kind of depends on the situation. I mean, not everyone is in that predicament, but the housing market is very tight. People, I'm listening to some experts talk about the Airbnbs, the Airbnb bust. That's what they're calling it. They're saying that people are going to be selling their Airbnbs because the housing market is going down and all this cheap money's going away. So I think that there will be opportunities. So if you're wise and you're able to pay off debt, save money, save capital, don't speculate too much. If you don't speculate with what you can't afford to lose, um, and I think that yeah, it's yeah, it's definitely something that could be opportunity. You said I checked my plans; they're 7.25. Are you talking about interest rate? The interest rate on the loan, 7.25%. Yeah, because that's a lot. If that's what you're talking about, that's a lot. But y'all, I gotta get going. I may jump on live back again later on. Just engage with y'all, talk some trash or whatnot. I'm about to go play some basketball. You got to take care of your physical health. I'm watching this show on yeah, 7.25. Woo. Yeah, that could be quite a bit. Yeah, but it just all depends. There's so many variables, right? Um, but yeah, I'm about to go play some basketball. I started watching the show called The Blue Zones on Netflix. It's pretty good. Talks where they go study like the places in the world where people live the longest, and it was really cool, fascinating stuff. Just they go to Japan, they go to Italy, what was the country right off of Italy, the island off of Italy, and they go to a lot of different places and they study like where people live the longest, where people are living to 100 years old. And so and they study their habits and such. And so take care of your health. And I encourage you all to check that series out too. It's pretty good. And if you haven't yet, I got some videos going to be uploading soon. I have a stock valuation 101 course coming up as well. So be sure to stay tuned. If you haven't subscribed yet, if you're on Facebook watching, be sure to go to my YouTube channel, The Money Level Show, and subscribe. Um, Neophyte, they're about to hit a lot of people on Google, and 5 to 10% is going to be the norm moving forward. Are you talking about the housing market or student loans? I mean, if student loans are variable, I understand, or if people are, yeah, obviously if people are borrowing from private companies like Sally Mae, then interest rates are going to be higher. The government seems pretty uh, consistent, but my loans are so old, man. Like I don't know what's happening now. I finished college in 2017, and right now I'm doing my master's degree, and I'm paying for that out of pocket. So yeah, this last year I came out of 15 grand. 15 grand. It hurts. It hurts. But I increased my income 26 grand a year. So, I could have spent that on some, just consumption, or I could invest in my education. So yeah, yep. But all right, y'all. Y'all take care. Y'all have a blessed day. I may be back on later. I gotta get going. So we'll talk soon.